Good afternoon. George Cavaligos for HFT bonds. Well, equities just closed on their highs. Bonds and notes are flirting with their lows from earlier last night, actually, not this morning. We did those lows last night. God, it was tough. The market never really dipped last night. I woke up this morning, my bids below were obviously not filled. I looked at the market and it was already trading 28, 29 in the 10-year. And I think the bonds were trading, I want to say, back above 14. I think they were trading 17, 18. And I was struggling. I'm like, it's going higher. You know the buybacks are coming. Wait for a dip. Wait for a dip. We got data coming out. Data came out. The jobs claims number came out. It was real strong. The market dipped 2 ticks and then came roaring right back. And I couldn't get them fast enough. I'm old. You guys know that. I'm over 55. Got arthritis in my hands. I don't make those fast moves like I used to. It's hard. I was trying to buy it after the number. I think we went down, I think the 10-year went down to 27. And the bonds might have gone down to like 18, 19 again. I don't remember the exact levels. But I put in bids and I wasn't lifting offers, and I should have been, but I thought, the number was so much better than expected. I think we were looking for a jobless claims number of 398 and it was 370, a lot better than expected. Market dipped 2 ticks and it just wouldn't, I thought for sure I'd get a better, fill, I'd get, the market back down, last night's lows, Globex opening, whatever, last night. I thought the market would have dipped more and it just never did. And then it was bid, made higher highs. I think we made half tick higher highs in the 10-year 3 or 4 times, and I think we made 1 tick higher highs in the bonds 2 or 3 times. But we did fill a large percentage of the roll gaps that were left on the rollover. We filled them completely in the 10-year. And depending on how you look at gaps, we got into the gap in the bonds. A complete fill in my world would have been 150, 105. 150, 27, 28 took a big chunk out of it. A lot of guys had 150, 28 as a big gap fill. I'm kind of leery on how they're looking at that chart. If you look at a short term, like an hourly or less chart, 150, 105 would have been a complete gap fill. I understand what they're looking at because we did get back to the previous lows at 150.28. Okay, I'll go with that. We got done with the buybacks. The market tried to rally. I think we went and made another 1 tick higher high on the 10-year at that point, and the bonds didn't make a higher high after the second buyback where they were buying the notes. And then the market went for sale. And it was just kind of sitting around the highs. I put a small short on, had to try it, And then the market started drifting lower, and then about 10 minutes after the results came out, supposedly there was a big seller of 10-year cash in the cash market, not in the futures. I don't think I really ever saw a big seller in the futures. There was one volume uptick right around the buyback, and it went back and forth. I couldn't tell if it was a buyer or a seller. But then, like I said, 10 minutes later, supposedly somebody came in and sold a bunch of 10-year cash. Got to imagine any longs going into the unemployment number wanted to take some profits, and I think that's what we saw. We saw some profit taking. It wasn't panicky. The market just kind of drifted lower. We're sitting right around the opening ranges, 150.14. I think we traded down to 12 in the bonds, and 133.26 plus right now in the 10-year. The 10-year is actually trading a little bit weaker than the bonds are at this point, which is kind of funny. It's not bearish, though. Remember, if the 10 years are weaker than the bonds, the curve's flattening. That's not mega bearish. Obviously, you're going to leave a big selling tail on the, doji candle from today, but, with the non-farm payroll data tomorrow, I don't want to read too much into it. I still got a little short on. I think I'm going to go cover it right now. We're trading 26 plus 27 in the 10-year, and the bonds are 12.13. I thought maybe we'd go down more. I think we could still see those lows from last night, 133.24, 23 plus in the 10-year, and what was it, 150.03.04 in the bonds. But, we got to go do the webinar in another hour. I got to get prepared here, basically, really, in another half hour. So I got to get cracking. Okay, please join us in the webinar. Any questions, please throw them in there. If you want me to look at something specific beyond just like the bond Elliott wave counts that I'm going to throw up there, commitment to trader stuff, whatever you guys have questions about, please feel free. This chat room, I want it to be more of a community. There are people contributing, obviously. I want more give and take if we can get it. Questions, answers, I'm an old teacher, remember? High school science teacher. I always loved it when kids asked questions. It helped the flow. It helped people understand what I was talking about, because I'm sure everybody doesn't understand everything, and I assume too much about people's understanding about Elliott wave and about the 30 years of pit trading, idiosyncrasies of the treasury market, gap fills, those types of things. I assume a lot of people understand those things because it's been so ingrained into my little community that I had on the trading floor. And everybody understood the same thing, that I assume a lot of people out there understand the same thing. I'm sure people don't. Please ask questions. I love it when you ask questions. Thank you so much. See you in the webinar in about 30 minutes and tomorrow in the chat room.